In this video, I'll analyze the Q1 FY26 result and Concall of Aavas Financiers. So let's start with the company overview. So Aavas is an affordable housing finance company. 68% of their AUM comes from home loan segment, and then 19% of their AUM comes from MSME and 13% comes from LAP. In terms of their geography, they are mainly present in the tier 2, tier 3, tier 4 cities of Rajasthan, Maharashtra, Gujarat, Madhya Pradesh. In terms of the state, they are present in 14 different states. So they are fairly diversified in terms of the geography. In terms of the average ticket size, they are more or less, they disburse around 15 lakh ticket size loans. 84% of their AUM comes from less than 15 lakh ticket size loans. So that is the point with the company overview. So let's talk about the result of Q1 FY26. In this quarter, they grew their AUM by 16% year on year, which is if we look at the peers of Aavas, like India Shelter is growing at a rate of over 30%. Home First is growing at a rate of 28%. Even if we look at the Bajaj Housing Finance with a huge loan book of 1 lakh 10,000 crore, they are growing at a rate of 24-25%. Whereas with a loan book of 20,000 crore, Aavas is growing at a rate of 16%. And if we look at their past AUM growth also, there has been a company with a growth of 15 to 20%, which is not good. Because if we look at their peers, the peers have been growing at a higher rate. Even with a higher loan book, Bajaj Housing Finance has been growing at a rate of 24-26%. So that is the point with the AUM growth, and that is why we could see one thing, that stock price of Aavas has not been moving since last 1-2 years. So that is what we need to understand, that if the growth does not support you, then obviously stock price is not going to move. So that is what Aavas tells us. Whereas if we look at India Shelter, if we look at Home First Finance, if we look at their stock prices, we know that what is going on in their stock prices. And if we look at the Aavas, as I said, it has not been moving since last 2 years. So that is the point we have to understand. So in terms of the AUM growth, I do not see any kind of a positive movement. In terms of their guidance, they are guiding us for 18 to 20% of AUM growth in FY26, and then after that from FY27 they are looking for a growth of 20 to 25%. Again, with a loan book of 20,000 crore, it is little bit low. Okay, even if they grow at a rate of 25%, it is little bit low, but it is what it is. We can't do anything. We have to accept the results. So that is the point. In terms of the disbursement, in this quarter the disbursement grew by 5%, but the thing is that it is because of a change in recognition of disbursement. Okay, this is a change in recognition of disbursement. That is why this degrowth happened. Till FY25, when Aavas was releasing a check, they were recognizing it as a disbursement. Okay, till FY25, but from FY26, Q1 FY26, what they are doing, now they have changed the method. Now they recognize the disbursement only when the check is converted to cash. Okay, so that is the main thing. And we all know that from issuing a check to converting it to cash, it takes around 10 to 15 days. So that is why the disbursement was little low, because there was a void of 10 to 15 days in this quarter. But the question is that, is it going to affect Q2? The answer is no. Why? Because it has a rolling effect. Like this 10 to 15 day is going to shift in Q2, then 10 to 15 days of Q2 is going to shift in Q3. So that is how it will roll in the future. So we can expect a similar kind of a 16 to 18% disbursement, a normal disbursement growth in Q2. And the management is also saying that in July the disbursement rate was 600 crore per month, which is around 16% disbursement growth year on year in July. Okay, so that is the thing. So the disbursement in July was in the range of 550 to 600 crore. So that is the point. So it translates around 16% year on year growth. So yeah, from Q2 we can expect a normal growth. Obviously in this quarter the disbursement was low because of some changes in terms of the recognition of disbursement. So that is the thing. And in the future also they are guiding us for a 16 to 18% of disbursement growth. And obviously if a company grow their disbursement at a rate of 16 to 18%, it will give them a AUM growth of 20-22%. Okay, so that is the point with the disbursement. So in terms of the asset quality, if we look at the asset quality, GNPA and NNPA have been stable for last several quarters, so there is no issue in terms of the asset quality. If we look at the 1+ DPD also, in this quarter 1+ DPD was little high, but mainly because of the seasonality. 1+ DPD in this quarter was at 4.15 level. The normal level has been in the range of 3.5 to 3.7. So obviously we can say that it was absolutely normal. It happened because of the seasonality, obviously. And if we look at the July 1+ DPD, then in July 1+ DPD is under 4%, which is a good thing. So that is a good thing. In terms of the asset quality, there was no problem in Q1 FY26. In terms of credit cost also, in this quarter credit cost was at 24 bps. So they are maintaining a guidance of 25 bps of credit cost. So you can expect, obviously Q1 is seasonally weaker quarter for every NBFC, every bank. So obviously we can expect a lower credit cost going forward in the year if anything bad does not happen. So yeah, that is the point. In terms of asset quality has been very stable for Aavas. So that is the point. I mean, if we look at the last few quarters, has been very good in terms of the asset quality. In terms of the spread, in this quarter spread improved by 22 bps. In the last quarter spread was at 4.89%, whereas in this quarter spread improved to 5.11%, which is a good thing that they again came back to a level of 5%. Because if we look at last few quarters, the spread was below 5%, so they again came back to a level of 5%, over 5%. So that is a good thing. And going forward we can expect a similar kind of a spread of 5.1% to 5 to 5.1% of spread we can expect going forward. So that is the point. And obviously if they can get more if they can bring their cost of borrowing at a lower level, so obviously the spread can improve. So if they can improve their spread, so that will help their maintaining their bottom line, that can help them to increase their bottom line. So that is the thing. In terms of the expansion, and in this quarter they did not open any branch, if I am not very wrong. In the last year they opened around 30 branches, and the management is saying that they will open 10 branches in Tamil Nadu in the coming quarter, in the Q2 FY26. So that is one expansion they are looking for. But anyway, the expansion looks a little low if we compare it to India Shelter, if we compare it to maybe Home First also. So yeah, expansion looks a little low, but again they are planning to enter Tamil Nadu. They will open 10 branches there in this Q2 FY26. So that is one point in terms of the expansion. In terms of ROE has been flat for a long time. If we look at last 2 years, ROE has been in a flat level of 14-15%. So obviously it is not a good sign for a company if the ROE is not improving. Obviously it is not good. If we look at India Shelter, if we look at Aavas, if we look at Home First, obviously Home First in this quarter Home First ROE was low because of the QIP they did in this quarter. So in terms of, if we look at India Shelter, Aavas value, they are growing their ROE at a very high pace, so which is missing in this company. So if a NBFC or a bank is unable to increase their ROE, then it is not a good sign, obviously. So that is what I can say about Aavas. In terms of PAT also, in this quarter PAT grew by 10%, which looks little low, obviously, no doubt about that. So that is the point. So if they can improve their spread, if they can improve their operating cost, so obviously, because they have undergone a technology transform, so obviously they can grow at a higher level going forward. But yeah, the question is when and how that growth is going to come. So that is the question. So we have to track it. Obviously Aavas has the ability to grow at a higher pace, but again, as I said, that when and how. And as I said in the AUM part also, that if a company has not been able to grow their AUM at a high pace, then obviously as a effect stock price is not going to move. So that is what happening with Aavas. In terms of asset quality, Aavas is on the top, I think. They are doing really good in terms of the asset quality, but in terms of the growth, that has been missing for a long time. Okay, so that is the point with Aavas. So we have to track it, that how the growth comes in the company. So that is the point I would like to say. But if we compare it to other players in this industry, then obviously India Shelter, Aavas value looks a better bet in spite of betting on Aavas. So that is the point I would like to say. Obviously not only in India Shelter, Aavas value, also the Home First is also a good company. So that is the point I want to say. So that's it for the video. Thanks for watching.